Gautam Shah is joining us now, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time as always. So we had a very nice 1,000-point up move, Gautam, and I think it came quickly, as these moves often do. Then sort of results have come through, a few, especially from the IT space, which has spoiled the mood a little bit. Global markets, no real big indications one way or the other. Which way, near term, near to medium term, according to you from here, Gautam?
Good morning, Prashant. Well, I don't think the markets have a trend because while everybody talks about this 1,000-point recovery that we've seen in the last couple of weeks, let's not forget in the first half of March, you had a similar 1,000-point fall all the way from 17,800 to 16,800. And, you know, there is a saying, a rising tide lifts all boats. I think that's really what has happened in the last couple of weeks, because there was this wave of negativity and, short positions in the market as we ended the month of March. And I think all of that has pretty much got nullified because the market has not allowed you to really maintain a cautious or a bearish stance. But having said all of that, I think as a technician, I do believe that the area around 17,800 is extremely important. I still don't have concrete evidence to say that the worst is over and that one can go all out and, create investment positions for the next 3 to 6 months, because this is looking like a market which is very dynamic. It will see sporadic actions both on the way up and on the way down, but the index is unlikely to have a trend. But for me, I think till the Nifty does not really get past 17,800, 900 convincingly and on a closing basis, I would still be conservative and a little cautious. And on the downside, I think we are watching this important support of 17,500. So if at any point of time this breaks, I think the bears can be back. So what we are actually doing is we are simply ignoring the headline indices, the Nifty and the Bank Nifty, and concentrating on stocks, because there are multiple stocks and sectors which are standing out and which are likely to do well irrespective of the market action.
So what are these stocks? I mean, I take your point entirely, Gautam. This is a market where the headline index is pretty much not doing anything. It's very, very range bound. But there is plenty of action beneath the surface. So tell us, where do you see outperformance? Where can alpha be generated now?
Well, there are a couple of sectors which have come back beautifully in the last couple of weeks. I want to obviously start about pharma, because it was a sector which was in a mega bear market for almost 18-20 months. So that index has come up really well, and I see further upside. This finally looks like a turnaround for good. There have been multiple turnarounds which failed in the last 12 months. But this turn, I think, looks very, very good on the charts. And I do believe that the pharma index can give you anywhere between 10 to 15%, even from these levels. Secondly, I think we love real estate. I think it's always was our favorite in the last 2 years. It's just that because of the market correction, the index came off. But the big boys actually, stood out. I mean, look at a DLF, look at an Oberoi Realty. Despite the market weakness, they stood out really well, and now it's coming back quite strongly. So real estate, I feel, is going to be the theme for the next 3 to 6 months. Across the board strength is what I'm looking at. And I would top that up with PSC, the entire PSC basket. I've been a big fan of it for quite some time now. And I think every time there is a dip, there is this rebound. So the typical Coal Indias and the NTPCs and the power grids of the world, and add maybe a few PSU banks, I think this entire basket looks good. So these three would be our best bets at this point. And obviously, to add capital goods, the only sector which did not fall in this 4-month downtrend that you saw in the recent past. So these 4 sectors, I think, stand out for me.
All right. Hi, Gautam. Good morning. Always good hearing your thoughts. So pharma is bracing to come out of that multi-year lull. So let's see how that goes. 10 to 15% upside even from here. What about the IT index? That's been the big underperformer this year, particularly in this month. Your view from here?
Agreed. I think the Infosys results has not helped. But if you really go into the mid-cap IT space, there hasn't been too much damage. Most of the mid-cap IT stocks have actually held out. I can give you a lot of names, a Persistent, a Cyient, and whole host of names which have done quite well in the mid-cap IT space. Large-cap IT has been a bit of a problem, but I see it as an opportunity for long-term investors. I think whatever negative was there is already out pretty much after the recent results of Infosys. And I think from these levels, you really cannot lose money as an investor. So there is no trading opportunity as I see in IT. But if you are having a horizon of 12, 18, 24 months, I think these are good levels to chip in. And that's what we are advising to our clients at Goldilocks.
45 points lower now on the index. We're I think at the low point of the morning, 17,616 is where we find ourselves at. Piramal Pharma is, I think, the only one which I can, reasonably large name, which I can see with any big gains on it. That's up 7% or so. Yes Bank has moved up a little bit. It's up about 4%. And there is Prestige Estates, which is up about 3%. KRBL, PNB Housing are some of the others in the 2.5% range. The security services company SIS is up about 3% or so at about 390. Gautam, what's your view on two things? One, I don't know if you've looked at the dollar index. Many believe that's on the verge of giving a break below 100. And what will it do? What will it mean for metals and steel in particular, in your opinion?
Well, yes, I think there is a lot of talk around the dollar index, but I just feel that the intermarket relationship between equities and Indian equities and the dollar index is not so much. So I would not be a big fan of saying that because the dollar index is going to fall big, equities are going to do well. I think that's unlikely to happen given the relationships of the last 3 to 6 months. But I think more importantly, I'm watching the USD INR. I think, that's been stuck in a range for about 4 months now. And if USD INR were to break 80, 81, 81.5, I think that will be a big thumbs up for the rupee. So that's something which I'm watching very closely. And on the metals, well, it's been an underperformer. It's seen a large fall. Even in the recent 1,000-point recovery, metals haven't really participated. And I do believe that it will find selling pressure at high levels. And if the Nifty were to get into a downtrend once again, which is possible, I think metals will be the punching bag. So stay away from high beta is the call. Stay away from a typical bank or a metals or even a Reliance Industries. 3 big pockets of the market which are high beta, I think should be avoided.
This year, surprisingly, the stocks that have performed the best are the auto stocks, right? Tata Motors is up 20% this year. Who would have thought? Bajaj Auto is up about 16%. So they are rising from the ashes, so to speak. But do you see further upsides in these names?
Well, last time when we spoke, I was not too positive on auto, but I think selectively the turn has been very good. I think we continue to like Bajaj Auto. In fact, we recommended it to our subscribers some time back. We also like Tata Motors as a slightly more longer-term story. And I think after the recent fall, the risk-reward just got very, very lucrative. And Maruti and M&M have also held out really well. So these 4 stocks, I think, stand out for me. But again, if you are somebody with a 6, 12, 18-month time frame, then you could dabble into them. But from a trading perspective, I still feel that these are high beta. And if the market's correct, they could come under pressure once again.
Okay. Anything else that you'd want to leave us with? The one space, and of course, we're going to talk about that in just minutes from now, is FMCG, right? ITC, of course, has been at record highs. You've had a good growth in many of the other FMCG names. Do you think this is a space to reckon with? Would you put more money to work in names like ITC?
Well, ITC is just holding the index, single-handedly. A stock that we really liked for a very long time. And I do believe that it is going to do bigger things, from here. So we like it as a hold, maybe a buy on dips. But another space which I think investors should look at, and I spoke about it last time as well, is gold and silver. I think it's a matter of time before gold starts hitting new lifetime highs on the international prices, which is past 2070. And I see a possible 20 to 30% move on silver towards a level of $29 to $30. So equities, I think in general, is going to be in a range for the whole of this year. But gold and silver is clearly in a trending move up.
All right, Gautam, thanks very much.